While you were sleeping last night, $5 trillion changed hands. Not through a stock market crash, not through some banking crisis, through something far more calculated, far more permanent, and far more consequential than anything you've seen in the news. China just executed the largest single wealth transfer in modern history. And I can prove it with hard data that most financial analysts are completely missing. And what I'm about to show you isn't theory, it's documented fact. And by the end of this video, you'll understand why the next decade won't look anything like the last one. Here's what's actually happening right now while everyone's distracted by political theater and trade war headlines. China has been systematically converting paper dollars into physical control over the resources that power modern civilization. We're not talking about stocks or bonds or digital currency. We're talking about the actual metals, minerals, and materials that make your phone work, your car run, and your country's defense systems operate. This isn't speculation. This is $5 trillion in documented transactions over the past several years, accelerating dramatically in just the last 18 months. And here's the kicker that should terrify anyone holding significant wealth in dollars. They're doing this because they know something about the future value of paper currency that most people haven't figured out yet. Before I break down exactly how this works, hit that subscribe button right now. What I'm about to share won't make it onto CNBC or Bloomberg because it challenges the fundamental narrative about how safe your dollars really are. Let me show you exactly what China is stockpiling and why it matters. They're not just buying gold, they're locking down the entire periodic table. Rare earth elements, where China now controls 85% of global processing. These materials power everything from smartphone screens to missile guidance systems. Lithium, essential for every battery technology that governments worldwide are mandating. Cobalt, critical for battery stability and jet engines. Copper, the backbone of all electrical infrastructure. Nickel, required for stainless steel and EV batteries. Silver, now classified as strategically critical for semiconductors and defense systems. Platinum group metals like rhodium, palladium, platinum, essential for catalytic converters, hydrogen fuel cells, and chemical processing. This isn't opportunistic buying when prices dip. This is systematic 24/7 accumulation backed by unlimited state funding. Every single dollar China spends on physical resources is a dollar they're converting out of US currency and into tangible assets with permanent industrial value. Think about that for a second. They accumulated massive dollar reserves over decades through trade surpluses. Now they're methodically converting those dollars into the literal building blocks of future technology before those dollars lose more purchasing power. If you control raw materials, you control who can manufacture. If you control manufacturing, you control prices. If you control prices, you control economies. It's not complicated. It's actually beautifully simple. Let me give you a perfect real-world example that proves this entire thesis. What is happening in silver markets right now? Silver has gone absolutely parabolic. We're talking about trading above $76 per ounce currently. If you bought silver at the beginning of 2025, you'd be sitting on approximately 150% gains. That's not normal market behavior. That's a supply shock meeting unprecedented demand. Silver has evolved from a monetary metal to something governments now classify as strategically critical. It's essential for advanced semiconductor manufacturing, required for solar panels at scale. Military defense systems depend on it. Aerospace applications require it. Modern medical devices use it. Without sufficient silver supply, entire industries grind to a halt. Here's where it gets insane. Chinese investors have figured out that in paper silver markets, futures contracts, and ETFs, there could be more than 100 contracts claiming ownership for every single physical ounce that actually exists. Once you understand that reality, the rational response is obvious. Buy physical metal and take delivery. That's exactly what's happening in China on a scale that's causing genuine market disruption. The UBS Silver Fund in China is so saturated with demand that investors are paying 60% premiums over net asset value just to get exposure. They're paying $1.60 for every dollar of actual silver. Silver now trades at $80 plus per ounce in Chinese domestic markets, roughly 10% higher than global spot prices. That arbitrage gap normally gets exploited immediately by traders. The fact it persists tells you physical supply is so constrained that normal market mechanisms have broken down. Yes, this is partly speculative mania, but beneath the speculation is a genuine fundamental truth. Chinese industries and investors are absorbing massive quantities of physical silver because they understand it is essential for technology, manufacturing, and national strategic interests. And silver is just one example of what's happening across dozens of critical materials simultaneously. China isn't just stockpiling silver in isolation. They're systematically securing the entire spectrum of industrial metals. Copper for electrical infrastructure, manganese for steel production, chromium for stainless steel, tungsten for industrial tooling, molybdenum for high-strength alloys, vanadium for energy storage, gallium for semiconductors, germanium for fiber optics, indium for touchscreens. The list continues across the entire periodic table. When you add up all the metals, minerals, and critical materials China has accumulated over the past several years, particularly the acceleration since 2023, we're looking at approximately $5 trillion in value transferred from paper currency reserves into physical strategic resources. This is one of the largest wealth transfers in human history, and it's happening in plain sight while everyone watches political drama unfold. Beijing understands something profound. Whoever controls critical materials doesn't just participate in the future economy, they control it. They determine who gets to manufacture what. They determine which countries can build advanced industries and which ones become permanently dependent. This is leverage that doesn't require military force or political coercion. It's power that comes from owning the physical foundations of industrial activity. Now let me connect this to what's happening with the dollar, because this is where it gets really concerning. For anyone holding wealth in USD, the US dollar is on track for its worst year since 2017, down more than 8% against a basket of major currencies. This isn't normal day-to-day fluctuation. This is a structural shift. Options traders on Wall Street, the people who make their living betting on currency movements, are extremely bearish on the dollar right now, and for a specific reason. Dollar down cycles, driven by structural factors, typically last 5 years or more once they begin. We're only in year 1. Multiple severe headwinds are hitting the dollar simultaneously. China's resource conversion creates constant selling of dollars to buy physical assets, creating relentless downward pressure on dollar demand. De-dollarization of trade means China is increasingly trading in renminbi with global partners, reducing dollar usage in international commerce. Japan's forced selling is coming because the Bank of Japan is raising rates to save the collapsing yen, which means they'll likely need to sell hundreds of billions in U.S. Treasury bonds to fund their policy. The carry trade unwind has been happening for over a decade, where investors borrowed cheap yen to buy higher-yielding U.S. assets. As Japanese rates rise, this trade is unwinding, meaning money is flowing out of U.S. markets. Strategic stockpiling competition means the U.S. will need to debase the dollar further through money creation to fund its own belated stockpiling of critical materials. These aren't isolated events that simply add together. They multiply. They create feedback loops. Each factor makes the others more significant. Most Wall Street analysts are dramatically underestimating how these factors compound when they converge, rather than simply adding linearly. The Japan situation deserves special attention because it involves some of the largest capital flows in the global financial system. Japan's yen has been collapsing despite recent rate hikes. This is a massive problem because it makes imports more expensive and feeds domestic inflation. The Bank of Japan has made saving the yen their absolute top priority. But here's their dilemma. Japan has gross government debt approaching 250% of GDP. To keep hiking rates without destroying government finances, they need cash. The only realistic source? Selling massive quantities of U.S. Treasury bonds. Japan currently holds over $1 trillion in U.S. government debt. If they unwind even a portion of that position, it puts enormous pressure on U.S. bond markets and the dollar. The yen carry trade has been one of the largest trades in global finance for over a decade, borrowing cheap yen to buy higher-yielding U.S. assets. As Japanese rates rise, this trade is becoming suicidal. Every sophisticated fund manager understands the risk has become extreme. The prudent move is to exit, and that means selling U.S. assets and buying back yen. This isn't speculation, this is financial logic playing out in real time throughout 2025 and 2026. Now step back and see everything connected. China converts $5 trillion in dollar reserves into strategic physical resources. The dollar enters a structural down cycle lasting 5+ years. Japan prepares to sell hundreds of billions in treasuries. Carry trades that supported U.S. assets for a decade are unwinding. Global trade patterns shift away from dollar-denominated transactions. Strategic resources become more valuable relative to fiat currencies. These interconnected dynamics don't just add together, they multiply and create feedback loops. We're watching a generational change in how wealth is stored and how economic power is projected. Paper currencies are losing relative value, while physical resources and strategic materials gain importance. This isn't like previous dollar cycles with one primary cause. This time there are 4 or 5 major factors all working in the same direction simultaneously. This is not a cycle that reverses when the Fed changes policy or when some trade deal gets signed. This is a fundamental restructuring of the global financial system. The framework that has dominated since World War II is being challenged not by military invasion, but by patient strategic economic positioning. So what does this $5 trillion wealth transfer mean for your personal finances? If you're holding significant wealth in dollars or dollar-denominated assets, the strategies that worked for the past 50 years might not work for the next 50. Real assets gain importance. Physical resources, tangible materials, and strategic commodities are likely becoming more valuable over time relative to paper currencies. Traditional safe havens may fail. We're entering an extended period where historical assumptions about safe investments might not hold. Diversification must evolve. Think beyond different stocks or bonds. Consider different asset classes entirely and potentially different currencies. The rules are changing. This change is driven by forces much larger than any single central bank or government can control. And we're potentially looking at 5 to 10 years of significant monetary turbulence. The decisions you make right now about how to position your wealth will echo for decades. Everything I've shared is strictly for educational and informational purposes only. This is not financial advice, and I'm not a licensed financial advisor. You must conduct your own thorough research and consult with qualified professionals before making any investment decisions. Let me know in the comments what you think about all this. Will China's industrial metal strategy succeed in fundamentally reshaping global economic power? Can the US dollar maintain reserve currency status through this transition? Are we watching the beginning of a shift to a multipolar currency system? How are you personally positioning for what could be a turbulent decade ahead? These are literally the most important economic and financial questions of our time. The decisions being made right now by governments, central banks, and individual investors will echo for decades. If you found this analysis valuable, smash that like button so the algorithm shows this to more people who need to understand what's happening. Drop a comment with your perspective because I read every single one. Share this video with friends, family, and colleagues who care about protecting their financial future. Subscribe to this channel because I'm constantly tracking these deep structural trends and bringing you insights mainstream media either misses or won't tell you. I'm not beholden to advertisers or corporate sponsors. I can tell you the truth as I see it based on evidence and research. Stay safe out there, stay informed, and remember that knowledge is your best defense during periods of major transition. Thanks for watching. I'll see you in the next video where we'll continue following this story as it unfolds in real time, because trust me, this $5 trillion transfer is just the beginning. We're watching history being written one transaction at a time.